So one of the first real decisions a new mortgage broker faces isn't about lenders, it's about structure, specifically AR versus DA. And this choice affects where you're supervised, how much freedom you have, and how quickly you're likely to progress. So here's what each actually means without any fluff. So what does AR and DA actually stand for? Well, AR means appointed representative and DA means directly authorized. Both allow you to give mortgage advice, and they just sit at very different ends of the responsibility spectrum. Neither is better by default, they're just better at different stages. So the first thing to talk about is what being an AR really looks like. See, as an AR, you operate under a network's FCA permission. So in practice, this means that you use their compliance frameworks, you follow their processes to a point, you're supervised and audited by them, and you usually get more day-to-day support. This is why AR routes are common for new brokers, for career changes, and people early on in the advisor industry. You do get people who stay there forever as well, but you trade some independence for structure and safety. Now, that's not a weakness at all, and it's often the smart move, especially early on. The second thing to talk about is what being DA really looks like. You see, as a DA, you hold your very own FCA permission. You are fully responsible for compliance, for processes, for systems, for file quality, for regulatory risk. You have full control, but that also means full accountability. See, DA suits brokers who have experience, who need a lot of experience, who understand regulation deeply, who want autonomy over their business and are comfortable building systems. It's freedom with weight attached. So the third thing to talk about then is the real difference that matters. You see, on paper, the distinction sounds simple, but in reality, it affects your day-to-day life. AR typically means more guidance, more checks, and less admin responsibility. DA, though, typically means more freedom, more paperwork, and more pressure. But the biggest mistake is choosing based on your ego instead of your readiness. So the fourth thing then is, which one should you choose as a new mortgage broker? Well, for most new brokers, AR is the best starting point. Not because DA is too hard, but because learning is faster with structure. You see, AR gives you exposure without full risk, feedback on real cases, time to build confidence, and a safety net while you develop your competence. DA can come later if that is what you want to do, but not everybody does that. You see, there's no prize for rushing it. So when then should DA start to make sense? Well, DA usually makes sense only when you are consistently competent, you understand compliance, not just fear it, and you want full control over your brand, your fees, your processes, and you're ready to build, not borrow infrastructure. See, at that point, DA becomes overpowering instead of overwhelming. So the real lesson for this is AR versus DA isn't about status, it's about sequencing. Most successful brokers start as AR, they learn properly, and then move to DA if and when they are ready. Choose a structure that supports your growth, not the one that sounds impressive. Because done right, both paths will lead you to the very same place. Now, if you choose to join an AR or you go employed even, what does that first week look like as a mortgage broker? Well, I break that down in a bit of detail in this video. Give it a click.